All right, so today is Tuesday. Is January 28th, 2025. We're gonna do a daily review of today's price action. And starting off from the monthly time frame, we do have price reacting from a monthly fair value gap, reacting with force to the upside, breaking previous month's down candle close, open, and high. And we do have clearly a bullish bias dropping down to a weekly. We have the same formation in the weekly time frame as well, with the fair value gap being rebalanced slightly, moving with force higher, changing the state of delivery, breaking this previous weekly candle down close open and high, going for higher high. So right now in the weekly, we are retracing down to that newly formed bullish weekly order block and weekly breaker block. And in the daily time frame, how is this transposed? We First of all, we can expect some form of bearishness in this candle right here, as we have the previous candle closing with a big wick up, and we can either expect this candle to close bearish inside this range or to the upper quadrant of this weekly order blocks body, or simply consolidate over here. So in a nutshell, we don't expect a very large range week. We anticipate price to be choppy and be slow, and I only want to aim for short, concise guerrilla warfare tactical movements. And dropping down in the daily time frame, we have Tuesday right here, about to close in 15 minutes. We have Monday dropping to an inversion fair value gap daily and weekly order block, taking this sell side over here, with body respecting this breaker and this order block. And then we have Tuesday opening below Monday and driving upwards, taking Monday's open and Monday's high, creating a bullish sentiment. And the first target where it rejects from is this order block's low or open, body's low or opening price, and didn't reach for the other body's open price. At the same time, there is a gap, but it's a gap between Saturday and Monday, and we don't count weekends, so we are only going to refer to the body here as a rebalancing of price. So in and of its own, this reaction over here is extremely bearish, because it says that it is rejecting from higher time frame PD arrays after taking buy side of previous day and closing bearish. So our next target would definitely be this rejection block's midpoint over here. I want to see how it reacts. As of now, I will try my best not to expect any certain predictions, and I will try not to take any trades. I simply want to see how price reacts to certain levels right now. We're in a very, very choppy and uncertain conditions. We are in an uptrend that is retracing lower with slow movements. So it's very choppy, very easy to get tricked, and very easy to lose money. So I will do my best to simply observe how certain levels react. Levels like this rejection block over here, levels like this order block, again creating support as it's offering it right now, and this inversion getting retapped and this low getting tapped, and possibly this inversion over here getting retapped, and this fair value gap in the daily being rebalanced. But nonetheless, I want to drop down to a smaller time frame and see how this day's price action unfolded. So we have Monday PM session moving higher with a new day opening gap forming between 5 p.m. Monday and 6 p.m. Monday, which is the new day opening, meaning Tuesday for the banks in the future sessions or in the future asset classes, basically future markets. And we have price dropping down between 7 and 8, retracing lower to this new day opening gap and this bullish order block, and drives up higher, changing the state of delivery over here. And price returns to it, finds support, moves higher. And where does it move to? It moves to this fair value gap over here as it rejects from it, and to this new day opening gap from Friday as it was one of our targets. And it does so between 8 and 23, which is 11 p.m. So Asia session moves higher for Tuesday. We have a opening range midnight gap being formed with London simply consolidating in a very tight range with very slow movements. So we're simply doing nothing. And what we can expect at this time over here is after London consolidates, New York to simply continue it higher and reach for this new week opening gap that got formed on Sunday opening of this week. And price during New York dropping down to a lower time frame, a 15-minute. I want to delineate the New York session with this red. So basically, the Asia session is always delineated with the green line, the like over here as well, from 7 to 11. London is delineated with the purple line, and New York is delineated with the red line. And we do have price. So basically we consider ourselves coming into the charts at 8 a.m. and seeing where price is right now. And at 8 a.m., what we do have is, so let me delete all of this. What we do have at 8 a.m. is price coming again into this midnight opening range gap. We have it delineated with quadrants. Up, we have upper side, lower side, midpoint. We have London low over here at 4 a.m. We have new day opening gap that only got retested during Asia. And we can consider this sort of rebalanced. Price can still fall to it and find support. But if we see signs of wanting to continue higher, we consider this level out here as rebalanced. And there is no immediate, underlined word, immediate need to drop again during New York session. So when we come at 8 a.m., we see sell side over here, this low and this low. Buy side, this high, this high, this high, this high. So there is a nice engineered buy side liquidity being formed that I very much suspect it to be hunted. And we have large movement up. We open Forex Factory to see what sort of news we can expect for today. And today, Tuesday, January 28th, durable goods order. Yeah, I mean, it's a medium impact. We don't have any high impact except the CB consumer confidence at 10 a.m. So we don't really expect much movement this 8 a.m. Time of the day. So we can simply observe. And we do see price coming down lower with force at around, it starts at 8:30 over here. It starts to do so without taking any major buy side liquidity. We do have, again, built liquidity here, 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 as here. So all of these, what price is doing all this time is setting a lower high. And this is simply the algorithm engineering buy-side liquidity, where people put their stop losses at, where they enter a short and put the stop loss high. And the algorithm is basically building all these orders up so it can sweep them in the near term or long term future. And we want to see how price is reacting to lower levels and where is it possibly finding support. One level is the 15-minute inversion fair value gap, where it once found resistance, filling it, rebalancing, move it lower, then through it, and as it drops again, it should find support again, and it does here as well. Falling into this fair value gap of Asia. Let me delineate this as inversion. And moving instantly higher. I would personally, frankly, I would love to see it fall into this new day opening gap to rebalance even better and then move higher, but price is going to do what it wants to do and not what we want it to do. So we will still respect it for what it is and be rational about it. Also, another level is this breaker block where it fell to. We see a high, lower low, lower high, lower low, higher high, changing the state of delivery over here. We have bullish order block, this black candle forming with its high rebalance here, and breaker block with its high rebalance here. And after it does so, time of the day is 9:10. During this time right here, I would not consider entering a short. The only way I would do so is if I was to judge, yes, this high got rated over here. This liquidity got tapped. We move lower, changing the state of delivery here and here. We rebalanced up into deep optimal trade entry 0.79 with bodies respecting it. And we move lower to a 1 standard deviation of this range. So if you were to enter in this bearish fair value gap and putting stop loss above here and going to 1 standard deviation, it would be a nice 1 to 4 in the early mornings. But I would consider it very risky, and only if I was just bored and would want to risk some money just for the thrill. But we're not trying to do that. We're not trying to feed bad habits, and we are simply trying to observe and avoid falling for the trap of emotional decision making. We want to be objective. We want to be focused. I want to keep all time frames in mind, directional bias, and if I'm long-term or higher time frame bullish, I would simply avoid considering taking a short in the shorter time frame, because one, we're trying to build that resilience and that persistence and consistency with the experience that we gain, and two, it's simply against the trend. So if we're going to do that, we need to have very strong experience and confidence, and also we need to be extremely experienced, and that is not what we're trying to do or what our goal is for the moment. Going back to the analysis, as price finds support again, we have displacement and price is nearing the equities open at 9:30. Equities open over here at 9:30. Opens wick high, takes bodies liquidity and moves lower into retracement. Where does it retraces to? This fair value gap, which is also an inversion fair value gap. And we expect strong support, especially when we see that there is one inversion and one fair value gap at the same level. We do expect strong support. And for a reminder, what an inversion fair value gap is, it's simply a fair value gap that, as we see here, this is a simple bearish fair value gap. that got disrespected through it and above it. And at this moment right here, it turns into an inversion fair value gap, which means that if price goes back to it, it should offer support as it did here and as it did over here. We do have support here, move higher, change of the state of delivery, gap being formed, price keeps moving higher, and at this point right here, we do have a New York opening range being formed between 9:30 and 10. And this whole movement up, I want to study which gap was left behind in the 15-minute first, and then dropping to a lower time frame until I find a gap. And there is one right here. 3-minute, there is one right here. Inversion. Well, I'm gonna leave it like a gap for now just to illustrate my point. And that's it. Yeah, this one right here that got respected, and that's it in the 5-minute. What is also good to consider is the fact that during New York opening range, the first 30 minutes, there is a very high probability of price setting the high or low of the week. And as we moved higher during this opening, what we did was we took the previously talked about buy side engineered liquidity. We see so this swept, this high swept, this high swept, this swept, this swept, this is swept. And what is also swept is the 1 hour fair value gap over here, with price filling this inversion over here. And what inversion was is gap violated, bullish gap violated bearishly. As price returns to it, should find resistance, and it does do so. In the 15-minute, we have another bigger gap, which is below this new week opening gap. And as price moves after 10 a.m., it disrespects the first fair value gap, which is concerning to me if I'm looking at bullish prices. And it also respects this fair value gap that is bearish, which indicates bearishness. Now, next in line is this bullish fair value gap. I want to see it get respected with change in the state of delivery in the smaller time frame. And we do see that here. We do see a high, low, higher high, higher than this bodies, then lower low, up, change of state of delivery. So this could frame an entry right here for long. But what we also want to consider is where are we right now? We're in between crossroads. We have created a bearish order block over here, but we have movement up, movement lower after rejection in the higher time frame, and respecting bearish fair value gaps and disrespecting bullish fair value gaps with this movement lower. So I'm in between crossroads right now. I also have liquidity engineered over here, sell side, and new day opening gap not being tapped. So the best way to navigate through this is simply just don't touch it. I find it highly unlikely for price to keep moving higher through this, and if it does want to do so, I want to find clues and see price move above this level, or at least this level, to show more strength and create some action, price action, as it does, for example, in the previous day. We see as it does here, We have some price action being formed for a long period of time, and then we see price reversing slowly, where we can frame an entry up here after we see all these confirmations. Well, here we don't have much confirmations yet. We only have this movement above here. So what I want to see in such conditions, if I want to trade, I would want to see a movement higher and then enter here and then target higher, or simply do nothing. Do nothing and wait for clear indications and clues, as right now we're in a very strange position. And as time goes on, price simply just moves lower. Would have taken the stop loss if we were long right here. Goes for these lows, again into inversion fair value gap. Finds support there. It changes the state of delivery above this. Now, again, if I want to see for longs, we have first change the state of delivery. I want to see price support here and move higher. And as it retraces down here, that's where I want to long it to and aim for higher prices. We see what price does. It sort of does so. It retraces down and moves higher. And now we can trade, or we can frame an entry in this bullish order block here that has changed the state of delivery in the higher time frame price action build up as well. And as price retraces lower, entry, bam, takes us out. First loss of the day. It's perfectly normal. It is with the reality of trading. Trading is not only going to be winning, it's also going to be losing. And this model offers 70 to 80% hit rate. And this time of the day and this moment happened to be one of that 20 to 30% losing rate. And what does price do? Moves higher. One thing that I also want to consider is time of the day. When are we right now that we are taking this trade? It's 11:50, getting into the lunch hour. Price is not going to offer a strong macro, or it's at least low probability. We could have avoided easily, but with our model, this would be a nice long trade that would simply turn into a losing trade, because we have sweep of liquidity here, higher time frame support level, this inversion, change of the state of delivery. We have consecutive up close candles, and it would be very natural for us to just simply go on a long here in this gap or in this order block. And as we do so, we would see our stop loss getting hit, and then price would move in our previous direction after taking us out, aiming maybe for this gap over here. So one very important lesson was that after we've taken a loss over here and we see this movement going higher, I don't want to enter again and risk again in that, maybe in this retracement. The reason why is that the conditions are simply not there. We are not higher time frame bullish in the daily. We are bearish. We see Monday bearish. We see Tuesday having hints of bearishness. We have reaction from a higher time frame level, which is this daily order block, and we reject from it, and we're trying to move again. It can be, of course, everything is possible, but I would simply avoid it, especially like we said in the beginning, expecting a slow and short range week where price will simply be choppy all around. But let's suppose we entered along here or in this gap. Price does found support on this inversion over here and this fair value gap, which is level where this order block resides as well. Where does it move to? For the low hanging fruit, which is the previous high. So a nice long would be framed here like this. 1 to 3. And this happens at 1 p.m. After that, price continues lower. Breaking structure, forming bearish order block. We have an inversion fair value gap. Fair value gap here, fair value gap here. Price hits inversion, rejects lower. Into 1 hour inversion of previous day's New York session. And that's where we're at right now. So very interesting lessons. If we were long here aiming for higher prices, we would get stopped again over here. Or if you were the smart one to take profit in this low hanging fruit and get out, that would be even better. Those who switched the coin, who flipped sides and were smart after seeing this big movement lower, this big algorithmic movement lower, would have simply gotten into a retracement. 0.61 inversion fair value gap, bearish order block, movement lower. After breaking the state of after market structure shift over here. And what we can do to frame an exit is this leg's movement lower. And also this leg's continuation, which is perfectly to the dot 1.25. Yeah, anyway, this is a recap for today. Lesson over here is simply some days we either do nothing because it's not high probability conditions, or we take the loss and go on with our day, or we simply wait for these algorithmic movements at key time of the day. And this entry happened between 2 and 3. This is considered a time of the day where we can enter in the macro, and as we see, it moves lower after. Well, that's it for today. Let's see what price will do tomorrow. It's a very, very choppy week. We also have news from China with the new AI model being open sourced, and equities are reacting differently and very choppy and unprecedented movements that cannot really be predicted very clearly, and probability is thus very low. So stay safe, stay focused, enjoy the day, enjoy the life, and yeah, peace out.